people can't wait to sell these stocks. I mean, already J.P. Morgan's down. J.P. Morgan was a decent quarter. Interesting, Wells Fargo was regarded as the best because there was a lot of stuff on the conference call. I think Bank of America should be regarded as best because their efficiency ratio just keeps getting better and better and better. They're making a lot of money off deposits. They got a giant deposit base. Wealth management doing incredibly great. I want to the return on the return on the equity is terrific, but I want to focus tonight on the digitization. We are willing to pay any amount for MasterCard and Visa, but when a company spends a lot of money and makes it so that you can have more than 1,000 branches closed and do a lot more business because people like the app, that should be included in the thoughts about the bank. And I want to emphasize that, if only because these guys aren't just sitting there and saying, you know what, woe is me, I'm brick and mortar. They're saying, look, younger people love the app. That's the way to get people to open accounts. They're paying less per deposit than everybody else. And that's what irritated a lot of people last week, which is that they're paying more for deposit and getting less. I think it was a very good quarter. But I want to emphasize again, I have not seen this group as despised as 2009. And these guys are making a lot of money. The growth is good. The year-over-year stuff, the revenues rose 8%. Record client balances. When is it going to matter? When are people going to look at these things and say, you know what, they turn the lights on, they make a fortune? They should be. Wilf has got Citi. Citi had a fantastic quarter. The stock had its worst day in ages.
Let's go over those for a minute, because you and I were here Friday morning talking about the numbers. You like JPM. You weren't crazy about Wells Fargo. Conference calls happened. Things sort of changed a bit.
Yes.
And you mentioned Wells
had a great conference call. They
had
really
a very
talked
strong
you through
conference
it.
call.
They talked you through it.
Which then did what to the narrative?
Well, I think that what happened is, that's a great question, first of all. What happened is you recognized very early on in the conference call that they didn't lose any business, substantive business, from all the different problems that they had. They chose to be more conservative. They were saying, you know what, listen, we're constrained right now. Housing's constrained in lending. Commercial real estate's constrained in lending. But understand, we're not going to do loans that we shouldn't. We are not going to go down the path of making bad loans. It was a considered call. It was a smart call. You're going to hear a lot of people saying Wells is doing better than expected. You know what? The release did not do Wells justice. Okay. But Tim Sloan did. I have to tell you, when I sat back, I said, why is that stock doing better? And then you read the conference call. It's like, well, because they're not going to blow themselves up.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.